So you're saying if I just keep my crypto gains under $10,000 or I buy a Lambo with it, I'm going to pay no tax on it. This is not correct. Let me explain today the personal use of assets method again and answer some of your questions. Hello everyone, my name is Rooshocks, and the most common question I get as a crypto tax accountant is, well, how can I pay no gains on it? How can I avoid tax? I don't want to pay tax on my crypto. What can I do? And then people discover the personal use assets on the ATO website and they think they've hit the jackpot. They think, yep, I've found the way to pay no tax on my crypto gains. Well, unfortunately, I hate to be the bearer of bad news, but this just isn't the case, and I'm going to explain that in further details. I have done a video previously on the personal use asset method, and it got a lot of confusion in the comments. So I'm going to be going through some of them comments today to use examples. So I'll explain the ATO's point of view, why people get confused, and then actually go through those examples with you. So let's have a look at the ATO definition here. So on their website, and this is where it comes from, it says personal use assets. So some capital gains or losses that arise from the disposal of a cryptocurrency that is personal use asset may be disregarded. So people read that and straight away go, oh, sweet. If I use it for personal uses, I don't need to pay tax on it. But that's not the case. So I'll keep breaking this down. So it says, cryptocurrency is a personal use asset if it is kept or used mainly to purchase items for personal use or consumption. So people straight away start thinking, well, if I use this to buy something with it, that means that I'm not going to pay tax on it. That's not correct. So we'll continue with what the ATO says. So we've got cryptocurrency is not a personal use asset if it is kept or used mainly as any of the following: an investment, part of a profit-making scheme, in the course of carrying on a business. So again, people are going, well, it doesn't say anything. So if I buy something with it, if I go out and buy a house or buy a car or go and pay for my electricity bill, does that mean I'm going to pay no tax? Again, no, that is not the case, as we will continue. So then the next part the ATO say is, where cryptocurrency is acquired and used within a short period of time to acquire items for personal use or consumption, the cryptocurrency is more likely to be a personal asset. So again, what they're saying here is if you acquire cryptocurrency and are using it for a personal use item in a quick turnaround, then it is more likely to fit that definition. Now this next paragraph is where we start to catch people out. So we've got, however, where the cryptocurrency is acquired or held for some time before any such transactions are made, or only a small proportion of the cryptocurrency acquired is used to make such transactions, it is less likely that cryptocurrency is a personal use asset. In those situations, the cryptocurrency is more likely to be held for other purposes. So what they're starting to say here is, well, if you buy cryptocurrency and you hold it for a longer period of time, it's less likely that you acquired that to buy something with it, even if your end use case is to buy something with it. So that's where that method of going, well, I'm just going to buy my Bitcoin, hold it for the long term until I've got enough to buy a house and do that. That doesn't work. Then we get into this next part that says, in most situations, cryptocurrency is not a personal use asset and is subject to capital gains. However, some exceptions apply, which we're going to go through some examples of when you might be able to apply the personal use asset method and pay no tax on it. And then this last paragraph is what confuses so many people. So we've got only capital gains you make from disposing of personal assets acquired for less than $10,000 are disregarded for capital gains tax purposes. And this is where the confusion around the $10,000 comes in. And everyone thinks, well, if I just use the $10,000 and I make less than $10,000, I'm not going to pay tax. That is not what that means. That is saying that, again, we'll read it again, we'll bring it up again. Only capital gains you make from disposing of personal use assets acquired for less than $10,000. So the personal use assets have to be acquired for less than $10,000. Has nothing to do with excluding other gains that are less than $10,000. So a quick summary before I get into the comments, but pretty much what it is going to be is that if you are buying cryptocurrency with the sole purpose that you are going to go and spend that on an item, then it is likely that it will be the personal use asset method. So this is really going to only apply for things that you could only buy with crypto. So the example the ATO use on their website is talking about someone that wants to buy video games that they buy with a cryptocurrency, and they're acquiring the cryptocurrency to buy that game. You may not be able to buy that game with fiat currency. So your reason for acquiring crypto is to purchase something else with it. And in this situation, you're likely turning that over pretty quick. You may be acquiring the crypto and then buying the game in the same day or the next day. And therefore, the gains you're going to be disregarding are going to be quite minimal anyway. Now, this could still apply if you buy the crypto and you may have to convert it back to fiat when you're doing it. So the example, again, they use someone that's buying crypto multiple times regularly, and then they're buying games on a regular basis, and for some reason one of these games can't be purchased. But again, it's a bit of a weird example, and it just doesn't apply very often to real world cases. So the most simple way to think about it is, could have I purchased that item with fiat currency? And when did I acquire my crypto? What was the reason why I did it? Did I only buy it with crypto because I had crypto, or was I acquiring the crypto to purchase that item? Now, great place to ask these kind of questions before I get into them, that I can go into much more details on the Rooshocks Discord. So I'd love for you to head over there. The link is in the bio. Not only am I talking about my NFT project, Rooshocks, which I highly recommend you go and check out, but I also answer lots of crypto tax questions, business tax questions, etc. And there's lots of great community discussion going on there. So I'd love to have you over there. So now I'm going to go through some of the questions that I've got on that previous video to be able to debunk some of these questions, or maybe to confirm some of them. So the first one I've got here says, so basically you're okay if you draw out profits under $10,000. I can't remember, but is there a time limit you can do it, like each week or month? Or does it add up as a total? By the way, keep on giving us good info. So no, that's not true. That is definitely not what I said. The $10,000, no, you can't just withdraw profits of less than $10,000. That's not true. It's quite a simple one. That is still going to be taxable. Unless you're using it for personal use assets and that was the reason for your acquisition, no, that is not the case. All right, so the next one we've got here is, hi, I'm wondering how this applies to NFTs and in-game items and lands I may buy so that I can play a computer game. Would they count as personal use? So NFTs is a bit of a tricky one, but yes, this is an area where potentially the personal use method could acquire. So you may be acquiring Ethereum, for instance, because you're wanting to play a game, and that game may not be a play to earn. It may just be a game that is played with cryptocurrency, for instance. So this is more likely to be a personal use because you have to buy the crypto to transact in this game. So this is a case where personal use could apply. It's not to say they always apply for NFTs, but if the NFT you're purchasing is a personal use item and you acquire the cryptocurrency just to purchase that, say you want to buy a bit of an artwork that's going to eventually go on a digital frame on your wall, then any gains that you make from that crypto in the short time you may hold it before it's converted to the NFT may be able to be disregarded. So let's jump into the next question. So we've got, hey Ethan, sweet video. Any chance I could go for a holiday to Bali, open up a bank account there and transfer my crypto to that account, cash out over there, bring the cash back and get to pay no tax? Also, would it be personal use for me to use my crypto for a deposit on a house? Trying to find loopholes. So no, you can't just move overseas and not pay tax. That's not how our system works. Pretty much if you do permanently move overseas, then that is deemed as you're disposing any capital assets at a real basic level here in Australia. You're going to pay tax on them. So no, moving overseas doesn't solve the problem. The next part of your question, no, again, a deposit on a house isn't a personal use asset because you're likely to acquire that crypto over a long period of time, cash it all out. There we go. That's the capital gains event. It doesn't matter what you do with it afterwards. It's not going to be a personal use asset. So we've got another one here that's similar to that. Is it still classified as personal use if I pay my mortgage with crypto? Again, no, that's not the case. You're acquiring crypto. If you're making gains off it, that's the disposal event, and then you're paying your mortgage. It doesn't matter if you're paying it directly with that crypto if you manage to do that. It's not a personal use asset because in these situations, people are saying, oh yeah, but I've made lots of gains. Well, as soon as you've invested in something for the intention of making gains, you're pretty much disregarding the personal use assets straight away. Again, another one that follows that up, would this still be the same as taking my profits to the bank, then getting the cash out and buying a car with it? Again, no. I think it's really hard for people to understand. The ATO example probably makes it hard. It doesn't just, if you buy something with it, mean that you're not going to pay gains on it. I know I keep repeating that, but as you can see, the question keeps popping up. And people getting confused just thinking it's that end use case that matters. It's the intentions when you purchase that is much more important. Here's another common one that we get. So isn't it only taxed if you gain $18,000 or more? So the reason why people are saying this is because of the tax-free threshold. So if you had no other income and you made $18,000 of crypto gains, and that would get included in your tax return, you won't pay any tax because you're under the tax-free threshold. But if you've already got existing income, it's likely you've already used most of that tax-free threshold, if not all of it up. So it doesn't mean that that individual asset class, you're allowed to make $18,000 as well. It just gets added onto your regular income and you'll pay at marginal tax rates, which could be 0% depending on where your total income falls. So we've got another one here about the $10,000. So with the $10,000 untaxed, is that annually I can take out $10,000? So no, that's not true. That's not what I said. You can't just take out $10,000. That's not how it works. And you definitely can't do that each year. It's not a cap. Again, this is on a per item basis when it comes to the personal use asset. So if there was something you were buying and you did make gains and it did deem as personal use, it needs to be under $10,000 for you to disregard that gain in that rare situation where the personal use asset method does apply. Again, a similar one here. So if you made $1 million investing in crypto, holding it for over 12 months and you want to avoid tax, can you slowly exchange it to fiat under $10,000 to avoid tax? No, you can't do that. If you've made $1 million on crypto gains, it's definitely not going to be a personal use asset. You're going to pay tax on it. Go and speak to an accountant or a tax lawyer to find out maybe if there is anything you can do to reduce it, or ideally speak to someone before you start investing so you have the right structures, etc. set up. And the final one I've got here is, but how can I pay personal good directly through crypto by crypto debit card? It still needs to be exchanged to fiat. So again, if you've got crypto and then you're trying to go, well, how can I get out of paying tax on this? How can I buy something personally with it? It's too late, because it already means your intent just when you purchase was for it to go up in price. So therefore, you can't use the personal use asset method. So the reason why that you'd be using the personal use asset method is because you have a reason why you're going to be spending your crypto on something. So retrospectively trying to go, how can I spend this? It doesn't work. I hope that video has been helpful. I'd love for you to continue the conversation. Ask more questions about this in the comments. Check out some of my other content and make sure you've hit that subscribe button, and I'll talk to you again soon.